CrowdStrike just reported earnings and they crushed it on the top and bottom lines. However, the Q3 guidance left investors wondering what's the next move for CrowdStrike. Well, in this video, I'm going to break down the numbers and the guidance for Q3, as well as show you live on the option trading platform exactly how I'm adjusting my options positions. Before we get started, smash that like button down below. It really helps to get the video out to more people, and I really appreciate it. You're also certainly welcome to subscribe as well to get the weekly updates, daily updates. I'm trying to do as many videos as I can during the week. There's also a free options workshop in the link below, as well as a paid course if you're new and learning options and you want to learn it from the ground up. Everything about options. And if you're an experienced investor and just looking to level up your game, there's some advanced strategies in there that are very beneficial. With that, let's get started. All right, guys, let's go through the CrowdStrike numbers here. I'm looking at market beat right now, and you can see they beat by 10 cents per share. The consensus earnings per share estimate was 83 cents. They came in at 93 cents for Q2. And the revenue results, they were expected 1.15 billion, and they came in at 1.17 billion. So real good there. Now, as far as the Q2 at a glance, if we look at the annual recurring revenues, now that's a key metric for cybersecurity based companies. It's a recurring revenue business model, so you want to keep that increasing quarter over quarter, year over year. And you can see they're at a 20% year over year increase. Now, last quarter, I like to compare the current quarter against last quarter. They were at 4.44, they're at 4.66 billion, so it's moving up. Net new ARR is 221 versus 194, so that's all good. Operating income is 255 and earnings per share 93 versus 201 and 73 last quarter, so increasing. Record cash flow last quarter was 384 million. 333 million cash flow this quarter. So similar, but their free cash flow margin is 24%. So very good moving forward. Now, the AI native security platform TAM in 2025 is 116 billion, but look at 2029, 250 billion. So huge growth opportunity there. If we move through the report, Falcon is their main platform, and it's a flex platform. So what it is, it's really their differentiator compared to their competitors. And customers are allowed to give a certain monthly budget, and then they can release these different modules based on exactly what they need, what they're seeing as threats, and they can put a spend in place. And then this platform will release those modules and adjust as needed for the customer. So it's kind of a autopilot for the customer moving forward. So they've got rapid platform growth. They've got 3 different business divisions: the cloud security, the NetGen, so the identity. So there's some companies that focus just on identity. And actually Okta is one. They just came out with earnings and they crushed it as well, but they really specialized in identity. But CrowdStrike does it all, kind of like Palo Alto Networks. So that's one of their competitors and the big guy. But CrowdStrike is really growing fast. They've got cloud security, so in the cloud, and they've got 35% revenue growth in that business unit, and then 21% in next-gen identity, and then next-gen log scale is 95%. So really growing fast in all those different sectors. Let's look at the, we already talked about the ending AR, the subscription revenue. So let's look at the subscription revenue. 918 million in 2025, up to 1.1 million. So we see that's increasing. Total revenue 964 versus 1169. So very good there. And cash flow is strong, increasing year over year. So key takeaways is that 4.66 billion ending annual recurring revenue, as well as the accelerating platform adoption. So that Falcon platform is really doing well going forward. And their guidance, let's look at their guidance for Q3. 1.2 or 1.2 billion to 1.218, and for the full year is 4.7 versus 4.8. So let's look, if we look at Q1 and what they issued for guidance as well, we can kind of compare and see if it's in line or down. But they had 4.1 to 1.1 to 1.15, 1.14 to 1.15. We're at 1.2 to 1.218. So it is increased over last year, just not as much as some people wanted. And then full year 4.7 to 4.8 and 4.7 to 4.8. So pretty flat. And you can look at their gross margins, subscriptions gross margins, 82 to 85%. So they've got really good margins across the board, and they're looking to increase that continually. So with that, let's jump into the trades that I've got on the option trading platform. So this is the Tasty Trade option trading platform. It's my favorite, super intuitive. There's a link down below if you want to check it out. There's some benefits if you go through the link. So for CrowdStrike, I've got everything in September except I've got a leaps and then a poor man's covered call, so a call option sold against it. And that's out 260 days. So everything is up today. You see with my CrowdStrike positions, if you close that, we're up $1,270 today. So after earnings, there's a volatility crush, and a lot of this volatility comes in. And since we're selling options for the most part on all these positions, the only one where we're buying is the one here, the leaps option. But because it moved up in price, we made money on that as well. So, and then we've got protection on the put credit spreads that we've got on. So overall, a good day for CrowdStrike. What was interesting was in the after hours, after earnings, due to the guidance, and to me it's not bad, it's just being conservative. I mean, if you're a CEO, and you don't want to, it's hard to beat the next quarter if you guide too high. So you want to, in sales we call it sandbagging. You want to come in with and guide with a conservative number that you know you can beat so that you can continue to beat every quarter. So that's kind of the game that they play. Now with CrowdStrike, we're up 2.89%, 2.9%, almost 3% right now after being down in after hours 6 to 7%. So that's interesting. People thought about it harder, and I guess they figured, hey, with CrowdStrike where it's at right now, and you can see a trend up on the chart, but there's been a dip, so huge buying opportunity. And we've got the Bollinger Bands are in white, so we're still at the lower end of the Bollinger Band. We're just now coming up on mid on the Bollinger Band. But we've got the 200-day moving average in red, and then the 50-day in green, and we've got the 50-day above the 200. Everything's trending up with a good buying opportunity, so I love this chart and setup. So I'm still very bullish CrowdStrike right now. So here's the trades that we've got on. Now let's look at these individually. We're going to look at the 405, 395 put spread, and then we're going to look at the 420, 410 put spread. And these are both $10 wides. We've got two tranches on here and one here. And then we've got the poor man's covered call right here with the leaps and then the call against it. So I'm going to show you exactly what I'm doing. And I was going to roll these when I saw the overnight trading. I thought the market was going to roll, was going to open down, but now it's switched and it's moved up. So I just like to watch how this is all coming in. Now, if you look, so let's look at the first one, 395 to 405. Now, 86% chance of probability of profit on this 405 because we've moved up to 434 right now. So that's a pretty good percentage of profit. I like that. But if we close that position right here, so we right click on the option trading platform and we close it, and we can close it for $1.75. Now when I put this trade on, I always like to collect around a third the width of the strike. So we're $10 wide, so I was collecting around $333 on it. So I know that around 150 bucks, 160 bucks is a good place to close that out or roll it to the next monthly option chain. We're in September right now and we're at 22 days to expiration. If I hold on and it still closes above the 405 strike price, which is a 395 it's a 1 minus 21, so it's a 79%, so roughly 80% probability of profit right now on that trade. I've got an 80% chance of making another $175 if it closes out of the money, or I can take my profits now and just close it or roll it. So that's something that we can look at. Basically, I like to close my put spreads at 50% profit. So this is 50% profit, and we're up 3% today. So I'm going to just go ahead and close that right now. We're not going to roll it. We're going to close it. So boom. There we go. We're filled. All right. Now you can see we've got this put spread on. Now I'm not going to close them all. I'm going to roll this one. So we're at 420, 410, and you can see we've got 1800 minus 214 or 1214. So we've got basically 600 bucks in extrinsic that we can collect over the next 22 days if we stay right where we're at right now. And our probability of profit on that is 82%. So that's really good as well. That doesn't make sense though. Let's look at, okay, 33. So our probability of profit on this is really the 1 minus 33. So it's like a 67% chance probability of profit. But I'm not going to take that chance. Let me go to regular option chains. So we've just got the regular options expiring the third Friday of every month. So what I'm going to do on this one, because we're at 420, there's a 76 still good chance, but I'm not going to wait this out. I want to be long, and I believe CrowdStrike's going to continue to move up. Look where it is. It's going to get back and test this, $500 range at some point. It's just a matter of time. So what I like to do is around 21 days, I like to go ahead and roll my options, but we're at 22 days right now, so perfect time. I'm going to right click, roll, and I'm going to roll out to the October 17th, and we can collect 80 cents for doing that. So we click on that. Now the 37 delta, I like this. It's a little bit aggressive, but perfect for what I'm looking to do, and I'm very bullish right now. So I'm going to see if we can get filled. So you can, right here, let's click that up. We're going to try to get filled at 90 cents. Actually, wow, it's moving up. It's moving around. It's 5.6 million shares traded, but you can see there is a bit of width between, so not super liquid. But let's see if we can get filled. I don't think we're going to get filled at 90, but let's go ahead and try. Nope. We'll go to activity and we'll just kind of adjust that. Replace. We're going to go down there to 60. Review and send. There we go. We got filled. So now, get out of that. All right, so now we've got this put credit spread at 420, 410, and we're in October. So that kind of reduces risk as well. We've got more time to work with. Now, let's take a look at this 445 call against our leaps. So leaps, I'd like to keep this leaps option. It's 260 days to expiration. I'm not concerned about closing it out until we get to 180, about 6 months. 180 days to expiration. Inside of that, then we start to see the time decay really take advantage, and that when we're buying options goes against us. So at that point, I'll look to close out. If I'm still bullish, I'll roll out to closer to a year. But we're fine right now on the leaps option. So now let's look at the call against the leaps, and that's the 445 strike. Now the 445, let's look at. Again, we're in September, so let's open that up. Here's the 445. It's got a 43 delta. So there is a 57% chance, so just above 50-50 that that's going to
expire worthless, and we're going to keep that entire amount of premium. So we've got $1,147 left in premium, $1,150, and we've collected $330 right now. So I could roll that to October, but here's the thing: we just had a big move up, so there might be some consolidation, and we might not move up that much further. So what I like to do on the call side is, since we're still not touching our 445 strike, I'm going to leave that and see. We may have a pullback in the market, and that can, this whole 1150, it's a hedge. It protects against the losing value on the leaps. If we move up and we breach the 445, that's when I will roll and adjust. So I can roll up and out into October, and I can, and I'll have made money. So even though I lose on the call, if it moves up to that 445, I will have made more on the leaps option contract in that at the same time. So it protects us either way. If there is a down move, I'm going to lose more on the leaps, but at least I'll have this hedge and make this $1,110 in extrinsic left. So I'm going to wait and see where we are. And once we get around that 5 days to 10 days to expiration in a couple of weeks, then I'll look to roll up and out, as long as I'm still bullish to the next monthly short call option.
All right, guys, remember to like and subscribe. Download the free options workshop in the link below. Check out the paid course if you're new and learning options, or if you just want to level up your game. And check out this next video if you want to dig into CrowdStrike a little bit deeper. Thanks for watching.